The M1 Abrams tank. Some would call it the ultimate flapjack flipper. You could shoot at that thing all day and you're not going to accomplish a whole lot. You could hit it with a rocket launcher. You're still not going to destroy that thing. We should all try to make a portfolio so strong that it is something like an M1 Abrams tank. Now, everybody's caught up right now in all these things, right? The president, what is Trump doing, tariffs, the economy, inflation, deflation, taxes, all this stuff, right? And that has a lot of people's attention right now. But at the end of the day, you got to understand all this stuff comes and goes. That is not where your real focus should be. That stuff should just be for entertainment purposes, honestly. You should not be making your investment decisions based upon these things because these things are consistently changing and they'll never stop changing, by the way, right? Where your focus should really be is on two things. One is having more income than expenses. That is something you can control. Unless you're retired or something like that, you don't need to worry about that, right? But for 90% plus of people watching us right now, you can control your income and your expenses. Number two is adding more ownership of beast companies so you can build out an overall great portfolio. A beast portfolio should do three things, and three things only a beast portfolio should do for you. One is it should throw you off incredible profits during a bull run. You should make more money than you ever dreamt during those bull runs where the market moves up substantially. Two, dividend income should be consistently poured out to your portfolios. And number three, you should be able to sleep well at night during the bear runs. So when everybody's caught up in all the short-term drama, you're able to sleep just fine every night, right? I think I slept 9 hours last night. It was a very good night of sleep, right? Whatever's going on out there, that is what it is because I've been fortunate to build up beast portfolios that get through everything. What I want to take you guys inside today is the public account in detail. $2.8 million plus portfolio. I've made lots of changes with this portfolio here recently. I want to show you all the changes. Also going to show you the P&L for all of last year. Also going to show you the entire P&L for so far this year. Additionally, we're going to go through more changes that I'm going to be making in this portfolio and talk about that. And so it's a public account focused video, okay? And I think you'll be able to learn a lot from this portfolio because remember, I just started this portfolio, what was that, 7 or 8 years ago, right? And now it's a $2.8 million portfolio. So we've been fortunate to build it and build it and build it. And this was also a portfolio that if we go back at the beginning of 2023 was just around $1 million. And now we're at this very, very substantial number. And that's even with very minimal deposits over the last couple of years, okay? Alrighty, guys, I need one thing only from you guys here today, and it's for you to smash that like button like the sign in my garage says. That's all I need from you guys. I hope you can do that for me. It takes like 1 second out of your day. Just please hit the like button on this video. That's all I need. If you want to subscribe here to the channel, you can certainly subscribe. Additionally, if you are looking to get serious about scaling up your wealth, understanding everything you need to understand in this game, get access to 1000xstocks.com, my private stock group, my private wealth group, Discord chat access, all that stuff, all my course curriculums. Pin comment down there, click on that, fill out a form, see if we can get you access to that either this weekend or maybe next week, okay? Alrighty, guys, let's get rolling. So, where I want to start here with the public count is showing you the P&L for the public count in 2024, okay? So, it was a good year. 2024 was definitely a good year for profits. If we add up all the profits and losses together, right? Basically $294,000 in profits in the public account. So that's our total gain for 2024. So not bad. Well over $250,000 of profits taken in 2024 in the public account. Nvidia was $11,500. These Chipotle put options, because I hedge every year to a certain extent, right? And 2024 honestly wasn't the best year to hedge. Actually, this year has been tremendous to hedge, but I still was able to get some nice profits on some hedges. So Chipotle, $11,000 plus positive hedge there. Toll Brothers, $10,000. Tesla puts, $6,400 made there. Polaris, man, that one's, I think, still gone down a lot. $3,700 made there. Made a little bit on some Target. Made a little bit on, I made a lot on Tesla. I took $157,000 of gains on Tesla. Took $96 of gains in Shopify. I just didn't know where I was going with that one in this particular portfolio. Palantir took $132,000 worth of gains. Revolve stock took $1,900 worth of gains. Meta stock took $37,000 worth of gains. Skyworks took $14,000 worth of gains. Baba took a $312 loss. Avant took a big loss. That one I just had in the portfolio for several years, and just didn't deserve to be in the public account. I still own some shares in another portfolio, but public account is such a beast portfolio. It's just not a beast enough company to be in there, just to be quite frank. Took a L on some Chipotle puts there, so that kind of offset some of the Chipotle gain there. Toll Brothers took an L there, so that offset the Toll gain there. And then Chipotle took a big L there. Yeah, Chipotle was a very tough stock to hedge against. But overall, if you add up all the losses, you add up all the profits and then you minus the losses, still $294,000 worth of gains in the public account in 2024. And then 2025 so far has been even better than last year. Incredible. Costco put options. I made $9,500 on those babies. Toll Brothers put options. I made $7,800 on those babies. Walmart put options, made $7,300 there. Monster made $5,600. Palantir made $143,000 of gains. Meta, $53,000 of gains taken. And then Tesla, $78,000 of gains taken. So total gain already this year, $305,000. And we're still early in the year. So certainly been a good one. Okay. Alrighty. So now that we've gotten into the P&L, which has been very fun last few years here, let's go ahead and let's start going through the positions, what stocks I'm going to be buying, selling, which ones I've gotten out of, which ones I'm going to be looking to get into, which ones have incredible opportunities, which ones have the best risk-reward profiles, all that stuff, okay? Alrighty, let's get started right here at the top with what I call Mr. Big Dog. Oh, baby! Meta stock, okay? This is Big Dog. 35% weighting in the portfolio. Absolutely gargantuan position. This position dictates a lot of what happens in the public account. And the great thing is with Meta, it's such a beast company that it ultimately means very good things for the portfolio. Now keep in mind, my cost basis on Meta is very low, $184,000 cost basis, and the position sizing now is $991,000. So substantial, right? Now, when it comes to Meta here, okay, I want to show you something. So one is Meta still attractively valued. Forward P at 24. Keep in mind, analysts are very often too low on their estimates. So there's a decent probability in regards to their EPS estimates. Decent probability the forward P is actually lower than 24 right now. So Meta is very attractive. And if I take you in, so we have projections now on 1000X. We have basically intermediate projections that kind of looks like this, okay? Bull case, base case, bear case. You can run all your numbers. But now we also have our advanced projections, which is much more in detail, okay? And so let me show you here for a moment why Meta is so attractively valued. So Meta, we could say, 18% revenue growth should be pretty much, I would say, in the bag in 2025. And then we can say that goes down 1% every year over the next few years. And so it just keeps going down. We go down to 15, we go down to 14%, okay? And let's just run numbers out to 2029, all right? And cost of revenue should go up much less than that. So let's say like 15%, 14%, 13%. Let's go 12%. And 11% here, okay? Now, operating expense should also go up much less than revenue growth. So I would say let's run an OPEX at 10% growth per year on average over the next, few years here, okay? And then we can go ahead and let's say, share dilution. They should honestly be buying back shares. So I don't even, we'll plug zeros into these guys because, when it comes to other one-off expenses, that can be up and down. That can be all over the place, right? And then share dilution, I'm also just going to put zero there because honestly, they obviously give shares out to their employees, but Meta's probably going to buy back a ton of shares over the next few years because they make so much money. So I'm just going to call it a wash in the end, okay? Now, we can say Meta should trade anywhere between a 20p at the very lowest, okay? I mean the very lowest here. 25 is kind of a midpoint that I would say is, that's not like crazy high, that's not crazy low, that's kind of where things should be, okay? And then we can say a 30 on the high end here, right? Which, honestly, if the company grows double digits, top line, bottom line, you could make an argument that the stock should probably be valued even higher than where it's at, right? So let's go ahead and see where we're at. So we are at approximately a share price come 2029 of $1,492 if you're going low range here, $1,853 kind of midpoint here. And if you want to push up toward a 30 PE here, you're at $2,223, okay? So the moral of the story is, come 2029, Meta's stock price should be somewhere valued between about $1,500 and about, we can call it $2,200. Yeah, that's why that one remains a big dog in my portfolio, because at the end of the day, that's just, it's just a very attractively valued stock, like very, very attractively valued. And so that's why I've taken a little profits on Meta, but I haven't really taken much. In just like, you look at the valuation, you're like, dang, the stock's still going to be a big moneymaker over the next few years. And let's be very clear, if you're buying Meta today at 619, yeah, it sucks. You weren't buying, at $100 like it was a few years ago. But at the end of the day, it's still a moneymaker. That's the bottom line. You can't look back and say, I wish I would have bought this. At the end of the day, you got to look at a stock and say, is this a moneymaker over the next 5 years? If it's a moneymaker over the next 5 years, and it's a substantial moneymaker, which Meta's still going to make a lot of money, at the end of the day, especially if you don't have a position, you got to buy it, right? And so I've tried to offload some shares, but it's hard for me to offload much, because I'm like, dude, this stock's going to be $1,500 to $2,200 stock in a few years from now. So, I still got to hold strong on those. Amazon's next biggest position, second of these 16 positions, I call Amazon Mr. Always a Buy. And the reason Amazon's always a buy is this company produces incredible revenue growth year after year after year after year when it comes to this company, okay? So we go ahead and take a peek here. You can count on Amazon growing quarter in and quarter out, year in and year out. And I don't see that changing anytime soon for the next, honestly, decades. At the end of the day, the e-commerce business just gets bigger and bigger and bigger and bigger. People order more and more stuff more and more often from Amazon. AWS just continues to grow bigger and bigger and bigger and bigger, right? And they are Goliath. They're hard to fight against. Their advertising business just continues to get bigger. And at the end of the day, they produce so much in cash flow now that they can continue to build their businesses bigger for the next chapters of growth, or go ahead and buy out other businesses, which they own a lot of other companies like Whole Foods and Zappos and a bunch of other random brands, Twitch. They own a bunch of companies over time, right? But we're still very early days in the earnings per share story in regards to Amazon. Remember, Amazon still has very low actually net margins on this company. They got a long way to go. 10% net margin on this company, I think long term their net margins are going to be more in the 15 to 20% range. So when it comes to Amazon, this company is another one of those that remains a buy. You always buy Amazon. It's never not, there hasn't been a time period in Amazon's history as a public company where the stock has not been a buy. And it remains true to this day. Amazon stock is a buy today. It was a buy yesterday. It was a buy last year. It was a buy the year before and the year before and the year before and the year before. Every year Amazon's a buy. Someday that will change, but it's not right now. I can tell you that much. Third stock of these 16 stocks is PayPal. 7.47% of the portfolio. We're up $19,000 so far in PayPal. I call it Mr. Buyback because this company is set up in a position where they're going to be able to buy back a ridiculous amount of the company over the next few years here. And the reason being is the market cap's very small in this company. It's around a $70 billion market cap, not very large. But they're doing buybacks. They're set up to buy back like $5 billion of shares a year. For my opinion, they'll probably buy, I think they'll probably buy between $3 billion and $5 billion worth of stock every year for the next many years. Probably at least the next 5 years. And so they're going to be able to take mass amounts of shares off the market. Additionally, we should see their net income continue to go up for PayPal. And so at the end of the day, PayPal is very attractively valued. And if we go ahead and we take a peek at PayPal's PE ratio here, forward PE, it's not like it's high. It's a 14 forward PE on this stock. It's a 14 forward PE. So PayPal is going to be a big money maker. And they just continue to buy back shares. I like PayPal a lot. Not the fastest growth company. It's not some company that you're going to see grow in revenue 20% a year or something like that. It's not that sort of company. But as long as they can grow revenue in that 5 to 10% ballpark per year for the next number of years, their net income should go up probably 10 to 15%. And then their earnings per share should go up probably closer to 15 to 20% because they'll be buying back a bunch of shares. So now you see how this story gets very, very exciting, okay? PayPal. Number 4 of these 16 stocks is AMD. Advanced Micro Devices. I call Mrs. Insane Risk Reward here. The reason AMD is such an incredible risk reward, and I've talked about AMD a lot over the last couple months, is a stock I'm banging my hand on the table right now. I think people will look back at 2025 and be like, why was I not buying AMD? It's not like they're going to be looking back 10 years from now and thinking that. They will be, by the way. But it's going to be more sooner rather than later. I think even in 2 or 3 years from now, they'll be looking back and they'll be like, why did I not buy AMD back in 2025? I think that's the way people will look at it. And here's the deal with AMD. It'd be one thing if AMD's forward P was insanely high right now, but AMD's forward P is in the 20s. In the 20s for AMD, right? And this company I think they're going to grow at a 20% plus clip revenue for years to go in the future. And some years, I think they're going to be growing far faster than a 20% clip. So AMD, man, that's a table pounder for me right now. Like, I continue to buy shares of stock. I buy their stock almost every single week right now. And it'll remain like that for at least probably the next couple months here. So, yeah, I love AMD. It's 7% of the weighting of the portfolio, but don't be surprised if once that one goes on a run, it ends up growing to become like 15% of the portfolio or something like that. AMD will be, in my personal opinion, a $300 to $500 stock, if we look out 3-4 years from now, right? I've run my projections using 1000X on this company, and it's a pretty good story here. Number 5 of 16 is Tesla Maesla. I call it right now, Mr. It sucks right now. Yeah, and the reason Tesla sucks right now is pretty obvious. We all know why that is, right? And it's hurt their business incredibly in the United States of America. It's hurt their business substantially, even more so in Europe. And it's, in my opinion, even affected it negatively in China as well. So, and then their energy business, I think we're going to see smaller growth rates in that business as well. I think the growth rates are going to start going down pretty immensely over the next couple of years. So, and the whole robotaxi thing, that's still several years out in terms of any sort of meaningful business there. So Tesla, it just sucks right now, man. And I don't see it changing in the short term. A year out, 2 years out, 3 years out, that might change, but stocks just sucks right now, and it is what it is, right? It made me so much money back in the day. The thing is, I almost hold these 777 shares nowadays almost as like a ceremonial position, because it's such a small amount of money compared to what I took for profits. It's kind of just like goodwill, I guess you can say. That's kind of why I hold Tesla these days. It's kind of just more of a goodwill hold. I'm like you made me so much, I'm just going to hold you down, okay, Tesla, okay? Number 6 of these 16 stocks is Palantir. So, Palantir, I call it the hottest girl in college, okay? And this is the issue with Palantir. Everybody fucking wants Palantir, okay? Everybody wants Palantir. Everybody wants Palantir. It's the hottest girl in all of college, okay? And people are willing to do anything to get with this girl. Anything. And so it's just a tough situation at the end of the day. The forward PM Palantir is 190. And that's even after this pretty substantial crash here recently of a 30% plus crash in the stock. And still, it's 190. Like, usually a stock falls 30 plus percent. Usually you look at the valuation like, okay, it's pretty compelling. Dude, Palantir's still at 190 forward P. A 2-year forward P on this stock is 126. So, Palantir is the hottest girl in college. Everybody wants to be with it. And it just creates a very tough situation. And so that's what's going on here with Palantir. I really like Palantir for the long term. I wouldn't hold these shares if I didn't. But, I had to take a lot of profits at the end of last year and the beginning of this year, because at the end of the day, the valuation just got so stretched. It's ridiculous. Okay, so Palantir, I love the long term, hate the valuation still, even after this major drop. I mean, if Palantir was $30 a share, it'd be a very different story, right? We'd have a lot more cushion there, but it's not. It's $83 a share. Number 7 of these 16 stocks is Nike. Nike I call Mr. Never Lose. So I call Nike Mr. Never Lose because Nike over the long term never loses. It always finds a way to win. So hold on. So when it comes to Nike, this is absolutely incredible. Somebody wanted to see the front, my waterfall in the front, so I had to pause the video there for a second. But, check this out. This is bad times for Nike. Like, recently, Nike's done on a trailing 12-month basis $48 billion, almost $49 billion of revenue. That's bad times for Nike. Like, any other apparel company, clothing company would gladly trade places with Nike. If that's your bad times, what do your good times look like, right? Now, analysts are very kind of bearish over the next, year and a half in regards to Nike numbers. I think they're making a big mistake. I think we're going to start to see a nice inflection upward in revenue growth, actually starting in the back half of this year. And so Nike, at the end of the day, man, you just can't bet against this company over the long term. They go through some tough spots here and there where sales won't be strong and this and that, but at the end of the day, they win. They're just like their athletes. They win over time, okay? So Nike, I built that into a pretty good sized position, 5.7%, and I could see holding a strong position in Nike for years to go in the future, and it's a dividend payer as well, which will pay a lot bigger dividends in future years, in my opinion. Cheesecake Factory. So when it comes to cake, okay, I call the stock Mrs. Growth for 20 years. And the reason being is if you've been following my content, you know I've been talking a lot about cake. Now up $22,000 on the stock. That does not include all the dividends this one pays out, which is one of the highest dividend yield stocks I own. I think this actually is the highest dividend yield stock I own in the portfolio overall. But when it comes to cake, because of their North Italia and Flower Child concepts, they have growth for at least the next 10 plus years there. And then if you look at their restaurant catalog after North Italia and Flower Child, they have another bunch of restaurants that are going to give them growth for another 10 years after that. So this company has growth on growth on growth for the next 20 years. And it's very rare you can find a company that you can see how they're going to grow for the next 10, 20 years. Right? Amazon's one of those companies. I'm like, the e-commerce business is just going to get bigger and bigger and bigger. The AWS business is going to get bigger and bigger. Their advertising business, like you can put the pieces together for somebody like Amazon. You can see how this company just gets bigger and bigger for the next 10, 20 years. Same exact thing for a company like Cheesecake Factory. When you understand what their concepts have for growth rates over this next number of years, you get like, oh yeah, I can see how they're going to continue to build out more and more of those restaurant chains and be there over the next 10, 20 years, right? Now, listen, never let this video die. I'm sure a lot of you guys watching this video have gotten to see this one so far, 16 years of stock market advice in 52 minutes. But for the people that have not gotten to see that yet, make sure you watch that. Or for the folks that maybe you watched part of it, but you didn't get to watch the whole video, never let that video die. It's my favorite video I put together in 2024. You'll learn so much from that video. Yeah, never let that one die. It's up to 132,000 views so far, and I released it just over 6 months ago. So check that out sometime if it ever shows up on your sidebar, okay? Next one up here, number 9 of these 16 stocks. I call this stock the road to $100, or the road back to $100, okay? And that's Celsius Holdings. Celsius, we're now up $10,000 in the stock, and it's about a little over 4% of the portfolio, okay? Listen, Celsius has been an absolute growth animal the last number of years here, okay? I mean, it's incredible the growth rate Celsius has produced. This is what has transpired for the company from $397 million on a trailing 12-month basis for revenue all the way up to $1.4 billion, right? Now, they're going through this transitionary time. Pepsi ordered way too much inventory. They had to go through that over the last a couple quarters here. They're going to have to go through it like one more quarter, and then they're up and away from there. And then with the Alani deal likely going through probably in the next 3 to 6 months, dude, you're going to see the revenue growth take off for this company once again, starting in the back half of this year and moving into 2026. And then you're going to see that followed up by a ridiculous amount of growth in the earnings per share and the net income in really like 2026, 2027. So the moral of the story is here in regards to Celsius, I understand things got, at the end of the day, when it came to Celsius, like the company the growth rates were way stronger than they should have been, right? We can call it at the end of 2023 into the beginning of 2024, because Pepsi ordered too much inventory, and then they had to do the wind down of that. And so now the growth rates aren't nearly as strong as really they should be in reality. So at the end of the day, like people just don't understand what's going on with Celsius, and I think we're going back to $100. We're not going back to $100 this year. Let's be very clear about that. But over the next 3 to 5 years, I think we're going to go back to $100 and then go above $100. So should be a fun ride, Celsius. Estee Lauder EL stock. High-end cosmetics company. They own many of the biggest brands. Like go into a Nordstrom and go to the cosmetics area. And you're going to see, and you can literally just go on your phone while you're there at Nordstrom in the cosmetics area, right? And just type in the brand and see if that's an Estee Lauder brand. And what you're going to find is many of those biggest high-end cosmetics brands are all Estee Lauder brands. It's ridiculous, okay? I call this one Mrs. Big Turn. There's a big turnaround going on for Estee Lauder right now that's going to produce some incredible profits in the stock over the next number of years here. We're going to see revenue growth return, in my opinion, margin growth return for this company, and net income and earnings per share growth return for this company. And so I think this is going to be, and you got to understand, Wall Street loves EL stock. They've hated it the last couple of years, but over the last 20 years, they love this company. Love it. They're going to come flooding back to this company as soon as we start to see that revenue start to go in the right direction, quarter after quarter, the margins and the net income. Oh my gosh. And you'll see that stock, and you might say, why buy it now, at $66 versus, wait for the turnaround to happen. By the time the turnaround's clear in Estee Lauder, the stock's going to be $120. You're going to be paying double the price by the time the turnaround's already here. So there's always a risk with buying a stock when the numbers are ugly, right? But at the end of the day, there's also a risk with not buying now, waiting for it to be clear, like they've had, 2 or 3 quarters of revenue growth, margin growth, earnings per share growth. Because, like I said, by that time, the stock's going to be like 120. And then you're going to be like, oh, shoot, I probably shouldn't buy it now because it's 120, right? And you're like, I'm hoping it goes down, and then it goes to like 200. And you're like, dang, maybe I should have gotten in at 66, right? Number 11 of these 16 stocks, I call this one Mrs. Growth Beast. That's Elf on a Shelf. It's about 2.4% weighting in his portfolio. I've been buying this stock very heavily in some other portfolios. I haven't bought any more shares in the public account just because I've been very busy with Nike and AMD here recently, and Celsius. But honestly, I should buy more shares in the public account as well. It's just, it's already, I don't know. I should buy more shares in the public account. We already made 836% on these shares, right? This one's just growth. They got it, man. They got it. You can't bet against that company. Revolve is number 12 of these 16 stocks. We're up $30,000 on this one, up 87%. I call this one Mrs. Sneaky Growth. When it comes to Revolve, the numbers, they were not the most exciting there for a bit, but we're clearly moving back in the right direction now at this point in time, right? We kind of had a trough in growth here recently, and now we're back on the upward trend. You could sorted on a quarterly basis here, and you can pretty clearly see we're back on an upward trend in regards to Revolve. We're back into margins starting to go up again for this company. We're going to get back into a earnings per share recovery story here for Revolve. So Revolve sets up very well. It's not a stock I talk about a lot. It's just a sneaky good growth company. Next one up here is Fubo. I call this one Mr. Profits Incoming. Okay, Fubo. Man, once that Disney deal goes through, oh my gosh, okay? Look out. $10. We're coming, baby, in regards to Fubo TV. Now, also, when you look at the overall portfolio, you see I own growth stocks, value stocks, and dividend stocks. All 3 groups. And you got to do that. Too many times people will just be in speculative stocks or only growth stocks or only dividend stocks. You're just missing so many great opportunities out there, okay? Honest, just added this one in the public account here. What was that, last week or so? March 6th, okay? And this is one, I say, Mrs. I'll see you at $10 plus next year, okay? Because honest, the turnaround's happened. With EL, we're waiting for the turnaround, in a stock like that. With honest, the turnaround's already done. Like, it's happened now. Like, they went from, if you look at the company 2 years ago, horrible margins, revenue growth that was like pretty much non-existent, massive losses, horrible cash flow, cash very low. It's all changed now. Two years later, revenues look great. Revenue growth is awesome for this company. And the categories they're in, good revenue growth. Margins have been looking phenomenal, going up and up and up. Profits, baby. We're going to be likely some great profits in 2025 for this company, and we're still early days in regards to that. And a cash balance that's sky high now. Company sitting on $70 million plus of cash, which for a little teeny market cap like Honest is all the money in the world. So Honest, the turnaround's happened. Now we're on our way to $10 plus, and don't be surprised if we're $10 plus this time next year. Carla and the team there is just on a tremendous job. I could not be more proud of that management team. Holy smokers, that's no joke. As they turn around that Titanic, and woo-wee! Sofi, number 15 of these 16 stocks, up 17,000 so far on this one, up 67%. I call this one Mr. I Will Become a Banking Giant. Sofi, it's so clear to me that this one's going to become a banking giant as long as Anthony Noto gets the company through recessions and doesn't have the bank go under. as long as they get through bad economic times and then the good economic times, they make massive profits, but they don't get too over leveraged. As long as they do that over this next couple cycles, you're going to be looking at a SoFi someday that's $100 billion market cap, $200 billion market cap. So that's what we'll be talking about in regards to SoFi, a true banking giant. That's the path SoFi's on here. Number 16, these 16 stocks, a speculative company I own called The Planet. That one I've been holding it for several years. It's just a very speculative stock. Like, if the MJ space can ever get off its rear end, Planet sets up to become an absolute giant across the United States of America with their retail locations, with their brands they own. I look at that one, they could become like kind of like an Anheuser-Busch or, one of those massive companies, a Diageo in the liquor category, like one of those sorts of companies, but in the Jack Jackson space. And so I'm willing to take a risk there. It hasn't worked out so far, but we'll see where things go over the next number of years here. Now, also keep in mind, dividends are thrown off to me. So according to Fidelity, I should receive at least $12,538 worth of dividends over the next year. Keep in mind, that's a minimum number in my opinion. I think we'll probably make, my guess is like $15,000 worth of dividends because Meta alone will likely be going up substantially on dividends. I also wouldn't be surprised at all if somebody like an Amazon announces their first ever dividend in 2025. We'll see what happens, but ultimately, yeah, I think we got a lot of dividend money incoming for this portfolio. I also look at companies like PayPal that could be dividend payers. I mean, they make so much cash flow for PayPal is always incoming. And I know they're really focused on the share buyback right now, but I wouldn't be surprised if PayPal instituted some sort of at least small dividend, so then they could at least become a dividend paying company, right? And then I could start making some dividend income from that one as well. So yeah, I think, this portfolio someday will eventually be a portfolio that pays me out $50,000 a year, $100,000 a year, if not multi-six figures in just dividend income alone, right? And if I look at the portfolio in total, right, some of these stocks I'm going to be more interested in continue to buy heavy. AMD comes to mind, right? Nike comes to mind. Celsius comes to mind. EL stock comes to mind, right? The Planet, I got to see what happens with their numbers. If the Planet's looking really good here over the next quarter or two, I might start loading up on the Planet again. Obviously that one's pretty speculative. And so loading up for a stock like Planet is much a smaller dollar amount certainly than some of these other stocks. And so we're looking really good here. I don't feel like I need to add anything in this portfolio right now. I've thought about adding back in nvidia here recently. We'll see what happens with that, right? It's just I believe AMD is going to have a far better return profile than nvidia over the next 3 to 5 years. And so it makes it a little difficult for me to put money in nvidia right now in the public account, let's say, for instance, instead of that money going into AMD, just because I believe AMD will, pretty severely outperform nvidia over the next few years. So I don't know. We'll see what happens with that. But overall, the portfolio is looking really good. I think if we look out, 10 years from now, I think this will be a $10 million plus portfolio. We'll be talking about 8-figure portfolio for the public account, an absolute, pretty big giant. And so it's just continue to build and build and build. And the biggest thing with this portfolio, we make it through the bear markets, We make it through these corrections that happen in the market. We make it through a crash, like what happened in 2022, right? Where the NASDAQ went down 37%. Pretty severe crash for the NASDAQ. And the portfolio got hammered, right? Because a lot of these stocks are those type of stocks that got hammered in that year, like Meta and Tesla and those sorts of companies, right? Palantir. But man, we made it through the other side. And, and then in the bull markets, this portfolio thrives. Like, you see just incredible performance that severely outperforms the S&P 500, let's say, for instance, right? And this portfolio, according to Fidelity Investments, has considerably outperformed the S&P 500 over the past 5 years. And so we'll hit 10-year returns here in a couple of years. And my belief is this will have severely outperformed the S&P 500 and won't even really be close. So, looking forward to continue to build it, okay? And I can teach you guys how to build these portfolios all in my course curriculums, teaching you everything I got up here. If you want to access that, pin comment down there, fill out a form. Let's get serious about scaling wealth in 2025 and beyond, as well as get full access to 1000xstocks.com, the full research platform I use on a day in, day out basis, okay? Much love and have a great day.